Morning, it's Vijay here, and it's Friday, the 2nd August. Welcome to yet another episode of Pre Market Commentary. Uh, sorry. Today's topic, the title is Anatomy of a Fall. Now, yesterday, it was a good day for Indian markets in the frontline stocks. You had the Nifty scaling 25,000, which eluded us for the last 2-3 times. I've been mentioning that the markets, if they were to top out, will not top out at the nervous 90s, and we have now crossed the hump. So our top can come anytime now onwards. Now, yesterday, the Bank Nifty struggled as usual, but you see, it has closed 5 days in the positive territory. Now, nobody would have, not nobody, very few would have observed that because you see, the best index to hammer would be Bank Nifty as far as the bears are concerned. Now, yesterday morning, Nifty opened high, but opening was the high, which is generally not a good sign for the bulls. Though the bulls did a rear guard action and came back in the closing, so it looked like as if the bulls have regained whatever was sold through the day. Now, FIIs, after some time, they have again turned buyers. They bought about 2,000 crores, while DIIs sold only about 300 and odd crores. So net from the institutions, it was a positive day. But what happened later was complete mayhem in the global equity markets. The European markets crashed more than 2%. And then you had Dow Jones, Nasdaq, and S&P opened bright. But then the data came, economic data, which brought the markets down significantly. For instance, Dow came down by 500 points, Nasdaq by 400 points, and S&P by about 75 points. So there, Nasdaq is down by more than 2%. Dow Jones and S&P is down by about 1%. So 1% here will mean 250 points. If you take Nasdaq, then it will be 500 points lower. So then what happened? That baton was passed to Asia. Japan, for instance, opened about 2,000 points. I mean, it went down as close as to 2,000 points, which is about 5%. Now, in their lunch break, they are down by about 1,864 points, which is about close to 4.9. Hang Seng did what it does regularly, keeps falling. It also fell close to 2% and down by about 330 points. As we speak, they are above their day's lows, but the damage is being done. Same thing with KOSPI, which is down by more than 2.5%. Now, most people would think that yesterday's fall was because of the Iran-Israel problem, and over the weekend there could be severe problems. Maybe some people are predicting a World War III. But I have a different opinion. I think the anatomy of the fall is that it was economic data first and then the geopolitical data. If you look at, I will discuss this in greater detail in my weekend podcast. So I think it's an important point to discuss. If you would like to understand geopolitics vis-a-vis economics, vis-a-vis risk markets, kindly tune in or at least listen to it once the episode is uploaded, which will be on Sunday night. Now, coming back to the short point is that we are likely to open 200 points. Gap down is what Gift Nifty talks about. But this, in spite of some good news yesterday, for instance, stocks like HDFC, Reddy, and Reliance did very well yesterday. And surprisingly, in the ADR markets, you had Infosys did well. You had Reddy doing well. You had the ICICI and Wipro not doing so well. So you had a mixed record as far as Indian ADRs in the US concerned. This, mind you, is despite a huge fall across the board. Now, yesterday results came of three heavyweights. One is ITC, another one is Adani Enterprises, and Zomato. Zomato is not really a heavyweight, but it is a very popular stock. Zomato did very well as far as the punters were concerned. But if you dig deep, then I think the results are not that great. ITC did not meet expectations, but that is expected because you see there is a rural recession. Now, as far as Adani Enterprises results, they were much better than expectation. So there could be some activity in these three stocks today. Already there was an activity in Zomato because it came during the market time. So today, as we go into the market, I feel the first hour low should be held. If it is not held, then you can expect further fall during the day. So what we talk of amateurs open the market, professionals close. If amateurs are going to open the market, it will open with a big gap and it will continue to sell for some time. And in the second hour low, if it is higher than the first hour low, then you can heave a sigh of relief. As an intraday trader, I would wait and then take my call as to what to do after the first hour. Or unless I see something spectacular as a trading opportunity, I will go either long or short. Right now, I am not doing anything. I'm not thinking about doing anything, but let the market open. So as far as the reason why the market has fallen, the anatomy, we will discuss it in the weekend review. But suffice to say that things are not as bad in India. Incidentally, Moody's has written a glowing report of what RBI has done, tightening of the cash flows. They say it's very good for the Indian system, economic system. So normally banks should have been the gainers today, but then you have a gloom and doom all over. So there could be a pressure even on the banks today. So one other thing which you need to keep in mind is if there is this geopolitical problem, then the first things which should go up would be the oil and the precious metals. Both of them are doing nothing. Even dollar index is doing nothing. In fact, oil has come down, which means there is a probability of a recession which is being factored in the market. And even the bond yields have come down. When bond yields come down and oil comes down, generally the market is fearing that there will be a recession. So there is a flight to safety when the people are buying into bonds. 10-year bond yield has come down below 4%. Now, today is a very important day for US markets. Their user futures are down, but we'll know before market about the employment data. Employment data, in my opinion, unemployment should have risen, which should be a cause for concern, but also a cause for anticipation for the bulls because you see the Fed may reduce interest rates by 50 basis points instead of 25 basis, which has been factored in by the market for September. So all in all, today it is logical to expect a big gap down. 200 points won't surprise. We should look at the first hour low, then look at the second hour low and see what happens between them and then take a call. So whatever you do today, I hope it is successful and trade safely. Thank you for joining.